All right, guys, back to work. Back to work, boy. Pretty good day today. A lot of students making money this morning in the trade room, getting those bear traps off support levels. Hope you guys made some money as well. Now, talking about tomorrow, though, we are in a beautiful spot for a nice big bullish reversal. But there's one problem. There's one big problem on the 60-minute. But don't you worry, though. I'm gonna give you guys a pretty easy game plan to work around that problem, make some money off that problem on Thursday. And I have a number of trades I'm tracking for tomorrow. I'm going to cover all my favorite trade setups in the video tonight. I want to make sure you guys have a game plan to make some money on Thursday. Now, before we jump in and talk about trades for tomorrow, make sure you subscribe to the channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out down in the comment section. Thank you so much for tuning in, sticking around, supporting the channel here tonight. Now, where are the best trades setting up here for tomorrow? Of course, as always, got my Nasdaq and my triple Qs all loaded up. Oh, I got the Emini and the SPY, and you will quickly see why I say that. We're in a great spot for a reversal here. We're bullish into trading ranges on both the S&P and the NASDAQ. We're sitting at big time support levels underneath that trading range, and I would love to get that bullish reversal right back up into that trading range. But I'll tell you though, there's one problem on here, and that one problem gives me two very specific types of setups I'm tracking for tomorrow. I'm not going to go over all that right now. We're going to drill down to some tick charts and talk about that in a moment. Before we talk about the two entry patterns, how to work around that problem you see right in front of you right now. Before we do that though, let's double check our schedule for tomorrow, because there's two things on my radar tomorrow that I want to make sure you are aware of. Tomorrow we have really the biggest earnings report of the week tomorrow. Next week is the big peak week of earnings, but we do have a big wild card tomorrow morning, sometime between 6 o'clock and 7:30 Eastern time tomorrow. We're going to hear from Taiwan Semiconductor. They are one of the leaders of the hunt for AI and supercomputers and processing chips. So that's definitely something on my radar for tomorrow. I have no idea how the market will react to that number tomorrow, but I do know it's possible catalyst, and I have that on my radar. So be aware. And then, of course, what we know about tomorrow is get a big block of news at 8:30 Eastern time, housing starts, jobless claims, and arguably the most important number for tomorrow is that Philly Fed manufacturing index at 8:30 Eastern time. Keep in mind, good news is bad news right now, because good news signals the Fed may not need to cut rates as quickly. So keep that in the back of your mind. Remember, the news is noise. Trade the reaction to that news. We talk a lot about that right now in our trade room. But let's get back to our charts though. So be aware of that tomorrow, right? That earnings report in the pre-market. It's a big wild card for us tomorrow, and we know we've got the 8:30 block of news there, so trade the reaction. Now, let's get back to our charts though, because we have a lot to cover tonight, and of course, the money is made on the charts. Let's go over now my favorite trades here for tomorrow. We're going to start off on the S&P and the SPY. And we'll wrap tonight up here on the NASDAQ and the triple Qs. I've talked a little bit about this already, but let's go deeper into this right now so we can get our hands dirty on this. We have a couple really important clues right now. Bullish into a trading range. Now, I know a lot of you guys are taking my free video classes, so you know this already. Ranges act like magnets. If I have a bull market into a trading range, I want to find levels of support below that trading range and buy back up into that range. This is why I said in the intro, we are in a great spot right now for a nice, juicy, bullish reversal. But hold up a little bit. Let's pump the brakes a little bit on that, because there's one problem, and then there's the strength of that move going lower. Now, if you watch my videos, you probably know this already, but anytime we see a strong move in one direction, what do we expect? A two-legged pullback and a retest of that low. This is where double bottom and the first of those two setups I mentioned earlier, these double bottoms can be very, very lucrative. Again, we want to be a buyer, but we know we've got the strong run down. We expect bears are going to be coming in here trying to retest that low. I would love to get what I call a double bottom reversal off of that low. Now, hold on. There are two different ways to time the entry on that. We're going to go into a lot of the details in a moment here on the tick charts. how to time that double bottom, right? So we'll talk about entry tactics on that here in a moment. That's one of the two setups. Now, if you understand that strong moves want to retest, in my trade room, we talk a lot about what's called the 2-try rule. In other words, the bears are going to try once to go lower. They're going to go higher, try twice to go lower. Remember, they want to retest that low. They're going to try at least twice to do that. And once those bears try twice, if they fail, this is where we can look for what I call a crown reversal. In my free video classes, we call these 2-try failures with a bear trap. So bears are trying to retest that low. They're going to probably give it their best shot. We're an overall bull market. They may not get there. And this is the second of the two setups we look for in these scenarios. Now, there are quite a few different variations of this on the faster entry time frame. So we're going to talk about that as well in a moment. But this is what usually happens. Now, again, we got some big news tomorrow morning. As always, right, that's definitely up in the air right now. But this is what usually happens. We see a big move up into a trading range. We're at support, strong move. Expect that retest. Expect those bears to try to short this thing and retest that low. Let's now talk about some entries here for tomorrow. Now, I don't trade off a 60-minute time frame, right? I trade off of tick charts in our trade room. This is a 7,000 tick chart. You can see listed in the upper left-hand corner. And if you're watching for the first time today, this is the 21 EMA. Now, there are a number of different clues on this chart right now. There's that strong run down that we saw on the 60. Here's that two-legged pullback, and you know the bears want to retest that low. That's exactly where that double bottom reversal comes in. At the same time, though, there's a range today on the faster time frames. We went bearish into a range. We broke out, pulled back, measured move, and now what do we know about ranges? We know that if we do get this reversal, the amount we go below the trading range is usually pretty good target above the range. If the buyers get what they want for tomorrow, they're going to punch their ticket and take out that 4,800, 4,803 and a quarter. And the third clue, which might be one of the most challenging part of this, is support becomes resistance. This whole area was a previous low. If you look left here, right, that area is a previous low, and you could definitely see the bears. They are holding on for dear life right now, trying to use that prior support into an area of resistance. So knowing all of that, right, knowing most importantly, we're at resistance, strong run down, bears are going to try to retest that low. Now let's talk about some entry tactics. Now, my favorite trade for tomorrow is that double bottom reversal. Now, double bottom reversals, they sound very easy, but remember, we're not going to pick the bottom on this. So when I talk about double bottom reversals, what I'm going to do is we expect that retest of that low, and what I'm going to do is I'm going to use this combination. Now, watch very closely here. Remember, I have no crystal ball. I don't know if this will keep going like it did today, right? It may keep on going. Who knows? Right? So I'm not going to pick that bottom. What I will do though is once we retest that low, I'm going to wait and see if we can get some rookies coming in, trying once, trying twice. Now, why do I say rookies? Well, because professional traders are going to sell high. Where are they going to take their profit? They'll take their profit at that low. So when all the pros are buying their way out of their short positions, in come the rookies. Professionals are not going to sell low like this, not in an overall bull market. If we can use what I call a 2-try failure, bears once, bears twice, my favorite way to trade is to run stops, right? Run stops. Think about where those sellers will have their stop losses and literally buy right into those stops. Now, pay attention on this one. Very, very important. If we get that double bottom reversal, that 2-try failure, not picking bottoms, but running stops to fuel the move. If we get that double bottom reversal, where does the market want to go? It wants to go right here first and take out that high. Now watch closely. As we go higher here, it will be very tempting to chase this market going higher. But remember, a lot of resistance up overhead. What is the one entry setup we talk about in our free video class classes that allows me to buy as low as possible. I don't want to buy high, right? I don't want to buy as we're going higher because you have to expect more bears are waiting up there. How do we buy nice and low? We buy with what's called a bear trap. It's a higher high in price and a little swing right below that prior swing. This is the combination setups. Again, it's a 2-try failure, okay, off that low. And then as we go higher, it's a higher high in price and a little trap right below that low. If we're really lucky, there'll be a trend line coming off that high, coming off that low. See how we combine a channel with that bear trap? Mwah! That is almost a guaranteed winning entry. That's why I love double bottom reversals. Now, as I mentioned earlier, we may not get that double bottom, right? It's an overall bull market. We may not get it. All we may get is here's your bears trying once, right? Here's your bears trying twice. This is that crown reversal pattern that I talked about earlier. Now, you got to be a bit careful on these because, again, we have all this strength going lower for the bears. They're going to want to retest that low. Again, I have no crystal ball. I'm not going to pick that bottom. What I'll do is I'm going to wait and get underneath the moving average. And then as we start pulling back, if I can start seeing the rookie traders, again, these are not professionals. Professionals are not going to sell down around these lows. They're selling up around here. So once those pros get in, they start moving down towards support. Let's see if we can get some rookies trying a couple times here, and same exact game plan, right? Same exact game plan. Trap those bears in, use their stops to fuel the move. And remember, if this thing jumps and runs higher, don't chase it. Do not chase this higher. Shallow pullback, higher high in price, and you want that, again, you want that bear trap off of that low. And again, if we're really lucky tomorrow, draw a trend line off those highs, right? Bring it down off that low. Man, oh man. These, just talking about this gets me excited for tomorrow. Now, let's take a step back and slow this down for a second, because I know a lot of you guys are trading these setups. You know these pattern setups, but I know a lot of you guys and gals are brand new to the channel. And this might be way over your head, a brand new language for you, but don't you worry. I teach all of these entry patterns. I have hundreds of examples of double bottom reversals, crown reversals, lots of bear traps, all covered in my free video classes. What I'll do is I'm going to put a link up here for you in the upper right-hand corner. Grab that information button, grab a little pop-up that shows up there, right, and take that free video course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. But more importantly, once we know where to look for the winners, I'll show you how to time the perfect entry with 4 different entry patterns to help kickstart making money on your own. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Apex or Top Step, hit that link, take that free course. It'll give you an easy roadmap to know where the best trades are going to be each day. It's perfect for someone who's serious about making money in the financial markets. And also, too, if you can't grab the link up top there, I'll put all the important links in the description of the video tonight. I'll put the free video class links down there. I'll also put our trade room links down there. We trade together every morning at 8 o'clock Eastern time. It's an easy way to learn. I'll put that link in the description. And I'll also put my Twitter feed down there as well. I'm on Twitter during the day. If you're on Twitter, give me a follow on the Twitter link. I post there as well. So a lot more information covered in the description. Now, let's talk about some variations of these pattern setups, because you may have already learned this already, right? Perfect setups don't happen very often. So we want to make sure we're ready for the messy stuff, right? The sloppy stuff. And don't forget, later on in the video, I'm going to talk about if we go higher. I will talk about if we start running higher here. So definitely hold on, and we'll talk more about if we don't get any of these patterns. I'll talk about run higher here as well. Let's talk about V-bottoms. V-bottoms are the least desirable of all the setups, but they are something that happens a lot in every market. We may go back to that low and we may get such a strong bounce off that low. Remember, I would love to go down, retest that low, trap those bears in, and squeeze their stops and squeeze higher, right? That's one of my favorite trades here for tomorrow. We may not get that, right? We may not get that. We may go down, and this thing may just bounce hard off of that low. If we get that V bottom off of that low, these will almost always turn into what I call a pop and grind channel. At this point, I don't want to chase it, okay? And this is where we have to be disciplined tomorrow, because what happens is it's probably not just me, right? But my monkey brain, if I get that V bottom, my brain starts saying, come on, Joe, get in, you're going to miss this. Do not chase after it. Draw a trend line off the highs. Draw a trend line off that low. Find that channel, right? And then look left, and you want that first test. You want that first test off that channel. The best entries, if you guys know my style, I love bear traps. I love to get right below that prior swing. This will oftentimes, though, get above the 21 moving average. The bears will come in, try to short this thing. We can use their stops to fuel for a failure into pullback combination. Again, this will all make a lot more sense with that free video course link I mentioned earlier. So again, I love the idea. I want to buy off that low, but if I can't get the entry, again, I'm not going to pick the bottom on that, right? That's a rookie's game. If it V bottoms and pops higher here, find that channel, buy that first test with any of the entry patterns you guys learn in the free video course. And then last but not least, and then we'll jump over and talk about if we go higher here. Last but not least, how would you sell it? How would you sell on the way back down here? I'm sure a lot of folks are wondering, okay, we're expecting a retest of that low. How do I short this? Well, here's the problem. We're not an overall bear market. We're an overall bull market. So I have to be respectful of the long-term bull. To do that, I need to use what's called a bull trap. Bull traps are very, very simple. As we start pulling back, let those buyers try it once. Let them try twice, and you want to short as high as you possibly can, right? Bull trap. It's called bull traps. It's a lower low in price and a nice strong signal above that high. Promise me, though, you're not going to take that setup into that low. Remember, that's a rookie mistake, right? The pros are going to sell nice and high. Once we take out that low, no more selling down there, right? Now we trap the rookie bears in and squeeze their stops. So if you want to short this thing on the way down, and again, I talked about this briefly last night on the video as well. When I'm doing stuff like this, right, kind of counter to the long-term trend, these are half-size positions. These are quarter-size positions. If you're brand new to this stuff, it could be a zero-size position. So please trade wisely when you're going against the overall trend. All right, so now you know how I'm looking to trade this for tomorrow. I'd love to get that double bottom, the V bottom. I'd love to get that crown reversal below that bear trap right there. Now let's talk about if we go higher, though, because it gets a bit tricky as we go higher, right? Because, well, let's talk about that. Let's go check out the Nasdaq now. The Nasdaq's getting a bit lonely over here, obviously, right? Been a while since I've talked about the Nasdaq here. Nasdaq is the same, almost same exact thing. Bull market into a trading range. That range is a magnet. We are sitting on support levels underneath that trading range. Like I said earlier, a great spot here for a bullish reversal. The challenge is the strength of that move. As I mentioned earlier, we have to expect that sellers are going to try to retest that low, right? Same we talked about on the S&P. And again, they will try twice to do that. Higher high in price, trap below that low, that's your crown reversal. Now let's talk about, though, what if we just kind of run higher here, right? If we run higher here, what's my problem? My problem is I still have that strong run down. So as we go higher, I have to be very careful. We get above these highs up here, slamming back down again. Okay, so the name of the game is if we go higher, buy as low as we can, right? Buy as low as we can, because if we do run higher here, we have to expect. Look at this chart in the Nasdaq right now. This is a 4,000 tick chart on the Nasdaq. Remember, the Nasdaq is not nearly as much volume as the S&P 500. That's why I use different time frames on tick charts between Nasdaq and the E-mini, right? The E-mini is so much more volume than the NQ, so it's almost double the chart time frame. That strength of that move right there, right? That strong move down tells us everything we need to know, right? Now we get that two-legged pullback, and now we expect we're going to see some shots running lower, right? Now remember, we may end up going a bit higher, right? And shooting back down there. As long as that, the way I think of this is as long as there's a big, strong move down, it's almost like unfinished business. You know, that's the way I look at it. I call these open loops, right, in our trade room. It's almost unfinished business, right? The bears have work they still want to get done. So as we go higher here, my big concern is I do not want to chase this thing running higher. Now, the buyers have a pretty good clue. The buyers have taken control of short-term momentum. In our video classes, in our membership classes, you'll learn about these 1, 2, 3 moves. 1, 2, 3 move. Again, I call these 1, 2, 3 moves. It's basically a reversal pattern for the buyers. And so what you do is whenever you see a 1, 2, 3 move like this, we draw off the highs, we mark off that low. And as I always say, find those prior swings and grab that first test. So I like the idea of the buy there. I like the idea of the buy there. Obviously, I love the idea, right, of the double bottom reversal as well. And real quickly on this one, like I mentioned earlier on the S&P, it wants to retest the low. So as we make our way down into support, I'm not blindly buying. I'm buying into stops, right, to trap the bears in and go from there. As we pull back, look right here, right? You can't see it very well in this time frame. Go to a 1,000 tick chart and you will see this beautiful setup this afternoon. Strong pull back, 1, 2, right? And then punch it up from there, right? Strong run down, 1, 2, punch it up from there. Remember, we don't know how far these things will go. That's why I said earlier, right? A lot of students making money on those bear traps off support levels, not picking bottoms, but waiting for the pullback and making sure the bears commit and then bam, right? Using their stops to fuel. So here, right? Pull back, 1, 2, back up, right? Go lower. Bear trap will be fantastic down there, right? Get underneath that moving average. Bears come in 1, 2. And again, remember, if it jumps up like this, grab that bear trap entry. I'm not going to go over everything again here. We talked about this before on the S&P, right? Trend line, channel right there, right? That's a beautiful, beautiful setup. Almost guarantee winners on those ones. If they run back to that low, same idea. 1, 2, right? Failure, back up, or that V bottom, right? V bottom, boing, right off that low. Grinds. Look left. Find those prior swings and get in underneath those prior swings, right? Okay, we talked about this, of course, earlier on the S&P. I don't mean to rehash it again, but this is slightly different chart here on the Nasdaq. Now let's talk about if we go higher. All right. If we go higher, as I mentioned earlier, my big challenge right now is I have to respect that whack right back down. Okay. There are 2 ways to do this. If we squeeze, again, tomorrow we get some big earnings reports tomorrow morning. If we do end up sliding running higher, what is the best entry pattern to avoid buying into all this overhead resistance? It's always going to be a bear trap. Okay. So keep an eye on this. If we start running higher, again, we should be looking for that reversal going back up into that range, but we have that strong run down, which again may keep those bears in business trying to run this thing back to that low. But if we see some news overnight, who knows what's going to happen, right? I have no crystal ball. I just know that if we do end up ripping and running higher here, find that higher high in price, grab that bear trap, and we're looking for, of course, right up into that big trading range overhead. That is the 60-minute time frame range up there around that 16,980 up to 16,955. All right. So as we go higher, I'm looking for bear traps to buy as low as we can. Now imagine now, right? Imagine now we get that bear trap. Here we are now. Now I have to be very, very careful and don't buy too high. Here's what I'm going to do now. Mark off that trend line, right? Off those highs, bring it off that low, find those prior swings, and these are usually pretty easy winners. When we have all of this momentum now for the bulls, remind me again, what do we expect if we see a strong move in one direction? We expect a 2-legged pullback and a retest of that high. So if the buyers do get their hooks in this thing, if we do start getting that squeeze, that reversal we would love to get tomorrow, we don't chase it. We wait for that pullback. And again, this will usually be a 2-legged pullback. And when I say 2-legged pullback, by the way, 2-legged pullbacks are very simple. You want to get under the moving average and look for a measured move. All right. So when I say 2-legged pullback, okay? Get under the moving average, and look for a measured move, okay? When I say measured move, by the way, think about A, B, C, D. Okay, you guys know this if you watch my free video classes, right? Think about a measured move, and when I think about a two-legged pullback, I think about a little bit more than a measured move, all right? A little bit more than a measured move. It won't be before it, usually, a little bit more than that measured move, okay? So when I say two-legged pullback, think A, B, C, D, right? Below the moving average, okay? That's one of the keys, right? Like right here, right there. Below moving average, right? Two-legged move, a little bit more, right, than a measured move, right? Okay, so now we get that strong pop-up. Now, do I pick the bottom here? Right? Do I blindly buy that? Of course not. No, we do not. We wait for either a bear trap signal, which of course is a strong green candle closing above the 21 EMA, or we wait for that 1, that 2, we trap those bears in and we squeeze those stops. Okay, the key is we want to buy as low as we can, right? If we do end up running higher, because again, that unfinished business from these bears down here, we may run all the way up and then just get popped, right? It may get shot right back down as they try to retest the low. And the bigger it goes, right? The bigger that pullback goes, the more lucrative that bear trap is going to be, and the profit you'll make on that reversal. All right, so buy as low as you can, find those support levels. It could be here, it could be a trend line here. I don't know exactly where we'll be, but tomorrow morning, as it runs higher, right, if it runs higher, I will certainly be looking for that deep two-legged pullback to buy as low as you can. And then one final thing. Again, we are in a bull market overall. It wouldn't surprise anybody with the thought of a rate cut coming in the first quarter here. It wouldn't surprise anybody if we start to grind and kind of melt up. Markets love to melt up as they go back up into a trading range. What that will look like on the chart is like this. It'll start making these series of higher highs. It will be a bit it'll be a bit frustrating because it won't pull back for you. That grinding movement like that, we call these pop and grind channels, and no, they are not my favorite dance move. But mark off that high, right? Mark off that low. You can do a little dance if you want to, right? Find those swings. Now look at this scenario here. We talked earlier about what was support becomes resistance. I can probably begin to use what was resistance now as support. And so obviously we'll play this by ear tomorrow once we know more about what we get tomorrow. But if it pops up and begins to kind of grind, kind of melt up as we go back up into that trading range, we already pretty much know exactly where support levels are going to be on that. Just a matter of waiting for that pullback, grabbing that bear trap below prior swings, trapping in those bears with that 2-try failure pattern. And again, if this thing pops and runs higher, what's your entry? It's always a bear trap. It's always a bear trap as it runs higher because we want to buy as low as we can. All right. Again, this is called pop and grind channels. It pops up, it kind of melts higher, grinds higher. That will be a very good sign for the buyers tomorrow, because if it melts higher like that, it basically means the sellers have given up on that, right? If it melts higher like that, that usually means the bears have gone to lunch or taken the week off or whatever. So we'll be looking for that first test to buy off of that low. All right, guys? Boy, we have covered a lot in this video tonight. I try to keep these as simple as I possibly can, but you probably know this already. The markets are complicated. There's a lot of variations, a lot of up in the air every day. So not to worry. Tomorrow morning, the game plan's ready, but tomorrow morning, we're going to get together and we'll trade this stuff together. 8 o'clock Eastern time. I can't think of any better way to learn to do this than to come out and sit down, look over my shoulder, watch as I do everything, trade along with me, ask a million questions. Give me a few weeks. Trading with us in the morning trade room, and I'll bet I can turn you into a consistently profitable trader. I'll put all the important links, the free class links for sure. Start there with the free stuff, the free course first. That'll get you ready to come out and trade with us in the morning trade room. I'll put all the membership trade room links in the description as well, the Twitter feed down there as well. If you have questions or getting any error messages on the free video course, right, please don't be a stranger. I'm more than happy to answer the call, the Skype chat, right, the live chat. So if you have questions, don't be a stranger. Reach out and ask for help. I can easily point you in the right direction for brokers, data, software tools, things like that. All right, guys, hope you learned a bunch here this evening. Hope you use this knowledge to crush it tomorrow. Hopefully I'll see you sometime soon. Trade along with with us in the morning trade room. It's been a really good month of January. It's been a fantastic week. It's only tomorrow, of course, Thursday. We'll see you tomorrow morning, 8 o'clock Eastern time. If not, same time, same place tomorrow night. We'll get ready for finally Friday. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.